Many people assume that rich people have places to keep or manage their money that others do not have access to. The fact is that most millionaires keep their money inside investments that any investor like you and me can access. And these investments include ETFs. In this video, I'll be reviewing the top 7 ETFs that you can buy and hold forever that many millionaires keep in their portfolios as well. And forever, I mean until you're retired and sipping margaritas at your very own beach house. All the ETFs mentioned in today's video should continue to be top performers in their respective niches for the next decade and beyond. If you need a quick refresher, an ETF or an exchange traded fund is just like an index fund where it holds 100 to 1,000 different companies that track a specific index. The largest difference with an ETF over an index fund is that an ETF can be bought on any brokerage platform regardless of the company actually providing the ETF. On the flip side, index funds should be only traded within their own brokerages simply because you want to avoid large fees, which is why most IRAs and 401ks are streamlined into one brokerage firm and kept there for the long term. The first fund on today's list is the Invesco QQQ Trust, which tracks the Nasdaq 100 index, which is the 100 largest companies that invest into technology and innovation, which makes up over 50% of the fund itself. If you take a look at the top 10 holdings, you can see that many of these companies are very similar to other technology ETFs, with Microsoft, Apple, Tesla, and more in the top 10. The largest benefit of QQQ is that it's very high growth simply because it's focused heavily on technology companies. Now, this means that during the fund's best years, you will see massive amounts of growth, but on the flip side, when the fund isn't doing too well, you might see drastic drops. This is simply because the technology stocks in this ETF have the highest highs and lowest lows. But in the long term, there's no doubt that this is a great performer. As of this video, QQQ is trading at $386, and year to date, it has provided a hefty 39% return, 1 year at 32%, 3 years at 14%, 5 years at 17%, and 10 years at 18%. Now you may be thinking, Paul, I want to buy this ETF, but it is way too expensive. Well, that's not a big issue because depending on your brokerage firm, you could buy fractional shares. For example, on a brokerage like Robinhood, you can buy as much of or as little as this ETF as you would like. For example, QQQ's current price sits at around $386, but if you only wanted to buy $100 worth, you could just simply put in $100. If you want to start investing in fractional shares, use my Robinhood link in bio and we can both get a free stock. The expense ratio for QQQ sits at 0.2%, which means that you would pay $20 for every $10,000 invested. I personally love this ETF very much because it's provided a hefty return for me in the past few years. And with the current artificial intelligence boom, I personally expect this ETF to perform very well for the next decade and beyond. On to the next ETF, which is the Schwab US Dividend Equity ETF, which currently trades with ticker symbol SCHD. I just had to include this best performing dividend ETF simply because so many people hold it for its overall performance and dividend payouts. SCHD is great because they screen companies before including them, such as the cash flow to debt ratio, the growth rate, and of course the dividend yield. The goal of SCHD is to invest into companies that have consistently paid out dividends for the past 10 years. This is why they include healthy companies inside the fund, avoiding dividend traps that push dividends for terrible companies. This approach focuses on high quality companies which tend to be large cap stocks and exclude REITs. I also love that SHD caps the total invested into security at 4%, and no one sector can exceed 25% of the entire fund. This helps greatly with preventing lopsided risk. Looking at the top 10 sectors of the fund, you can see that it does tilt more towards health technology, finance, and consumer non-durables. The top 10 companies are different from most of the ETFs on this list due to the dividend component, and these are high quality companies which include Broadcom, Verizon, PepsiCo, Merck, Coca-Cola, and more. As of this video, SHD is currently trading at a price of $74, and it has a year-to-date return of 1.94%, 1 year at 5%, 3 year at 15%, 5 year at 11%, and 10 years at 11%. The cherry on top is that it has one of the lowest expense ratios at just 0.06%, which means that you would pay $6 for every $10,000 invested. The dividend yield currently sits at around 3.64%, and you have to remember that total returns assume that all dividends are reinvested. SCHD is a dividend-focused ETF that holds many high-quality companies, has very low expenses, and a wonderful long-term performance. Next up, we have the Vanguard Information Technology ETF, ticker ticker symbol VGT. The goal of VGT is to track the performance of the MSCI US Information Technology Index as closely as possible. VGT achieves this by holding the same stocks in the same proportions as the index itself. VGT focuses on the information technology sector, where it includes companies that sell software, hardware, and services related to telecommunications, computers, and the internet. The highest focus is in the system software and tech hardware sectors, with heavy holdings in Apple and Microsoft, and it's also nice to see other companies such as AMD, Adobe, Oracle, and Nvidia included in the fund. VGT is trading at $432 per share, with a year-to-date return at 42%, 1 year at 23%, 3 year at 16%, 5 year at 20%, and 10-year returns at 20%. You can clearly see that the fund has amazing performance for the past decade, and with an expense ratio of just 0.1%, which is $10 for every $10,000 invested. And this fund is a great pick for anyone interested in buying into information technology. I personally see this fund doing very well for the next decade and beyond. Next up, we have the Vanguard S&P 500 ETF, otherwise known as VOO. This ETF is probably one of the most famous and well-known ETFs on today's list, as it is a core holding for many millionaire portfolios. VOO strives to mirror the S&P 500 index directly, which is an index of the 500 largest companies in the United States, which have been around for many years, and they have a lot of momentum going for them. VOO is trading at $406 per share and has a year-to-date return of 20%, 1 year return of 12%, 3 year return of 13%, 5 year return of 12%, and 10-year return of 12.6%. With stellar performance comes a super cheap expense ratio of 0.03%, which is just $3 for every $10,000 invested. VOO is an ETF that many millionaires hold in their portfolio as foundational holdings, simply due to the high growth, diversification, and low costs. I personally think this is one of the best ETFs to buy and hold forever. Next up, we have the Vanguard Growth ETF, or ticker symbol VUG. VUG is an ETF that seeks to track the SRSP US Large Cap Growth Index, which is made up of the nation's largest growth stocks. Growth stocks focus on growth and appreciation rather than dividend payouts. Because of this, the largest sector in this ETF is technology at over 50% of the entire fund, with 13% of the fund invested into Apple, followed by Microsoft and Amazon. VUG is currently trading at $282 with a year-to-date return of 37%, 1 year at 16%, 3 year at 11%, 5 year at 14%, and 10-year returns at 14%. It has a very small expense ratio of just 0.04%, which means you would only pay $4 for every $10,000 invested. Now keep in mind that because this company is heavily concentrated into high growth companies, it does present some risk, but due to its low turnover, tight tracking, and razor thin expense ratio, this makes it one of the best large growth funds available. Our next ETF is the VNX Semiconductor ETF with the ticker symbol SMH, which is indexed against the semiconductor sector index, where the fund tries to mimic the actual index. Semiconductors are core components in every electric device you own, from your smartphone to your computer at home. It can comprise of CPUs, GPUs, or transistors. I personally think that the demand for high-performing electronics will continue to grow exponentially. The top 10 holdings in this fund include top companies such as Nvidia, Broadcom, AMD, Intel, and more. SMH is currently trading at $152 per share, and it is up 58% year to date, 37% in 1 year, 25% at 3 years, 26% at 5 years, and 25% at the 10-year mark. As you can see, this ETF is the highest performing ETF on today's list, but that also does come with risk since it's heavily concentrated into the semiconductor industry. This ETF also does come with a higher expense ratio of 0.35%, which means that you would pay $35 for every $10,000 invested. In my personal opinion, this is a great fund that isn't really as popular as you would think. If you want to add a great growth ETF to your portfolio, this could be a great option. The last ETF on today's list is the Vanguard Total Stock Market ETF, otherwise known as VTI. As you may or may not know, VTI is my personal favorite ETF simply because it gives you instant diversification into the entire US stock market. VTI tracks the entire US stock market and holds over 3,800 different stocks across many different sectors. VTI focuses on diversification and decreasing risk, investing into a broad range of large, mid, and small cap stocks. If you're someone who wants to be diversified into the entire US stock market, this ETF is perfect for you. Now, although it is diversified, VTI is technology sector heavy, and then it is followed by consumer discretionary, healthcare, and financials. The top 10 holdings prove this, with companies such as Apple, Microsoft, and Amazon being held at the top. VTI is currently trading at $219 per share, with year-to-date returns at 20%, 1 year performance at 12%, 3 years at 13%, 5 years at 11%, and the 10-year returns at 12%. VTI's expense ratio is also one of the lowest in the industry at just 0.03%, which means that you would pay $3 for every $10,000 invested. VTI provides diversity, low costs, and gives you a great gateway into investing into the total US stock market. Most millionaires invested into the stock market hold some type of ETF in their portfolio, and the 7 ETFs mentioned in today's video are in great positions to help you grow your wealth for the long-term horizon and beyond. That is it for today's video, guys. Thank you so much for watching. If you learned anything in this video, please smash that like button and subscribe for more future videos just like this. If you're new here, my name is Paul and I talk all things money and finance, so thank you so much for watching. As always, your life is a masterpiece, so let's unlock your full financial potential together. And with that, I will catch you in the next video. Take care.